Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the amount of mortgage owners that are going to come off the deal that they're on to higher than maybe rates that they were expecting. You see, the Bank of England has just released a study that they've done into where mortgages are, at what point are they looking to renew, how many people are going to have an increase, and there's also some people that will actually have a decrease in their mortgage rates, which is good news. So we're going to talk about that and more in this video. If you're new around this channel and you haven't done already, do subscribe to the channel over there and hit the bell notification. We're on the way to 33,000 subscribers, which is absolutely awesome. And let's get some more views on this video by smashing like, tickling like, doing something to that like button. I'll be honest, that helps with the YouTube algorithm. That's how you get more views on a video. So just take a moment to do that. So the Bank of England has released a report this week and it's talking about the state of the mortgage market. And it's been turbulent. I mean, you guys that watch the videos regularly, a lot of you comment saying, well, one day you say the rates are going up, then you say they're going down. Well, in fact, they have been going up on the whole for the last 8 weeks. We did have one lender this week. If you want to see who that was, who cut rates, go and check out a video from a couple of days ago. But on the whole, rates have been going up. But in the summer, they were down. And so what's happened this year? Well, the year started fairly slowly. Transactions were quiet. 2023 was one of the quietest years for transactions for a lot of solicitors, agents, and those types of people. And also, it's obviously slow for lenders. And they want to lend money. When they lend money, they get transaction fees. That makes them more money. And they've got to get the market moving. Slowing down of the market is not good for a lot of businesses. And so early this year, around about the springtime, people started cutting mortgage rates. The Bank of England hadn't even started cutting rates at this point, but the lenders did. That started a bit of a price war, and during the summer, rates went down. In fact, some of the lowest rates went down to around 3.49%. There was multiple lenders, around 10, below 4%, and that did stimulate the market somewhat. And October this year, transactions were really busy. In fact, 25% up. I had a valuation on a property this morning and the surveyor was saying that they are busy at the moment, and that is the knock-on effect from lots of those deals that started to go through in October. But they have stopped going down. There isn't so much competition now. In fact, inflation started to rise a little bit again. The rate that the banks borrow at, the swap rate, increased because of UK budget and potentially a trade war around the world after Trump's tariffs. We'll have to see how they play out. And so there's a little uncertainty. And so right now, there are 4.4 million people that have a mortgage that expires before 2027. So a fair chunk of people that have that. Now, roughly half the people that have a property in the UK are unencumbered, no mortgage on it, and half have mortgages on it. So 4.4 million people have got rates that finish by 2027, so within the next couple of years. And for some of those people, they're going to have quite a hike if rates stay around what they are today. So there are 420,000 people that if the rates stay where they are today, their deal will go up by £500 per month. Now, that's a big hit to a lot of people. You've got to think there are people, including myself, I have one mortgage that is around 1.2%. 1.2% on a 5-year deal that I got at the absolute best time. And that really will be a bit painful when that deal comes off and goes on to that higher rate. And that's what they're saying, is there is going to be a number of people that are just going to really feel the pain. Now, of all the mortgages in the UK, there are around 25% that will see a fall, which is good. So they will see a fall because they most likely remortgage during that volatile period where we had Liz Truss and the markets turned on her and the Bank of England caused the rates to go up even higher. It was a volatile time. Mortgage rates at that point were around 6.5%. So there's people that are fixed on these high rates that are coming to an end, and they're going to be delighted when they get off those deals and feel like the rates that we've got today are brilliant because their mortgage payments will go down significantly. Now, what else is going on? Well, the Bank of England is saying that things we've got to keep an eye on that could keep mortgage rates high for longer now is we need to see how the budget plays out. So you'll have seen it in the news quite a lot. Since the budget, you've got a lot of big companies now saying that they're probably going to lay staff off after Christmas because of higher national insurance, higher minimum wage, and uncertainty on how that's going to impact the economy. So that's one side of things. But you've also got some uncertainty. We are a global market now, and a lot of people are worried about a potential trade war with America. You see, Trump's come out this week and said he is going to put a tariff on stuff from Mexico and from Canada of 25% if they don't stop immigration into America and the fentanyl drug being distributed around America. So there's lots of talk, and the Mexicans are obviously on the phone to Trump, and the Canadians are trying to resolve this issue before. Maybe it's a bargaining tactic. We don't know actually until it actually happens. But that gives the markets a little bit more uncertainty, and that will keep swap rates higher. It will keep mortgage rates higher until we know for sure. Now, if Trump gets in and that point that there isn't any tariffs, that's just tick that box off. We've got the uncertainty out the way, and you might start seeing rates coming down, and maybe this is not going to be as bad as the Bank of England is forecasting. But if we get higher inflation in the UK because of the budget, and we get a tariff war around the world, that could mean that we get a volatile period of time where people are going to come off a mortgage and they're going to get these high rates. So what should you do if you have a rate that expires during this period of time? Well, I would speak to a broker or speak to your lender as soon as you can. The smart thing to do is to fix a rate early. So argument's sake, I would say, let's just say the best rate you could get today is 4%, maybe. There are some rates around that still. And you go to your lender and you say, look, I want to fix this rate. Now, you don't start that rate till your old deal expires. Let's just say that's 1 month, 2 months, 3 months, 4 months, or 5 months, or 6 months. In that period of time, rates go up. They go up to 5%. You locked in at 4%, so you're not going to feel the pain from that increase in rates. That's very important. But if rates go down, you will be able to swap onto that better rate. So that's the smart thing to do, is just to act early. That's very, very important. Last thing I want to share with you, as it's the Black Friday weekend, is in the description. I'm going to put a link. We do have a Black Friday sale at the moment. It's on the fundamentals of property investing. It's over 90% off at the moment. 1,000 people have bought this program. It's a one-off cost. There's no recurring payments. Everyone else is charging thousands of pounds for the same type of training. So do go and grab the fundamentals of property investing while you're here, while it's on an even bigger discount than it normally is. And while you're here as well, subscribe, check out all the other content on my channel, including this video right here.